Welcome to BuyTheDip.news. I'm your host, Robert. Today is February 25th, 2026. Our AI growth stock model found 10 buy-rated stocks. Here's the full breakdown. The following content is for informational and educational purposes only and does not constitute financial advice. Always conduct your own research and consult a licensed financial advisor before making any investment decisions. Ares Management Corporation Financial Services Sector. Asset Management. Ares Management Corporation, NYS. Ares announced that its co-founder and chief executive officer, Michael Arufati, is scheduled to present at the 2026 RBC Capital Markets Global Financial Institutions Conference on March 11th, 2026 at 12:15 p.m. Eastern Time. Ares Management is a leading global alternative investment manager offering clients complementary primary and secondary investment solutions across credit, real estate, private equity, and infrastructure asset classes. As of December 31st, 2025, Ares Management Corporation's global platform had nearly $623 billion of assets under management, with operations across North America, South America, Europe, Asia Pacific, and the Middle East. A live audio webcast of the presentation will be available on the Investor Resources section of Ares Management's website at www.aresmanagement.com. Here are the key growth metrics for Ares. Sales growth trailing 12 months, 53.3%. EPS growth next 5 years, 22.9%. Target price upside, 48.2%. Drawdown from 52-week high, minus 39.0%. 200-day smooth moving average position, minus 27.5%. Overall score, 73.0 out of 100. Metric rating, buy. Article recommendation, buy. To summarize Ares, article recommendation is buy. Growth stock score is 73.0 out of 100. Metric rating, buy. Axon Enterprise Incorporated Industrial Sector. Aerospace and Defense. Axon Enterprise Incorporated, NASDAQ. Axon reported better-than-expected Q4 results and raised fiscal year sales guidance, driven by strong demand for Taser 10, Body 4, and counter-drone equipment. Software and services revenue rose 40% year-over-year, and annual recurring revenue climbed 35% to $1.3 billion, supported by continued adoption of premium software and cloud-based services. EBITDA rose 46% and adjusted earnings per share reached $2.15, representing a 25.9% margin. Axon Enterprise raised its full-year revenue and EPS guidance, reflecting continued demand for premium products and cloud adoption. Here are the key growth metrics for Axon. Sales growth trailing 12 months, 33.4%. EPS growth next 5 years, 26.7%. Target price upside, 44.3%. Drawdown from 52-week high, minus 41.3%. 200-day smooth moving average position, minus 22.6%. Overall score, 71.5 out of 100. Metric rating, buy. Article recommendation, buy. To summarize Axon, article recommendation is buy. Growth stock score is 71.5 out of 100. Metric rating, buy. Eldorado Gold Corporation Basic Materials Sector. Gold. Eldorado Gold Corporation, NYSE, EDG, posted strong 2025 results with 488,268 ounces of gold and operating cash flow of $752 million, but higher costs from royalties, and labor inflation drove higher AISC and negative free cash flow, with full-year cash flow negative $233 million largely due to Scoury's investment delayed to Q3 2026 due to moisture damage to cyclone feed pump VFD capacitors and slower power line approvals. Eldorado Gold guided 2026 production of 490,000 to 590,000 ounces gold and 20 to 40 million pounds copper with consolidated AISC of $1,670 to $1,870 per ounces, plans $375 to $405 million in growth capital at operating mines. A 60% increase in exploration to $75 to $85 million, and announced a quarterly dividend starting Q1 2026 after significant 2025 share buybacks. Here are the key growth metrics for EGO. Sales growth trailing 12 months, 37.4%. EPS growth next 5 years, 53.2%. Target price upside, 10.4%. Drawdown from 52-week high, minus 13.2%. 200-day smooth moving average position, 55.7% above. Overall score, 74.5 out of 100. Metric rating, buy. Article recommendation, buy. To summarize EGO, article recommendation is buy. Growth stock score is 74.5 out of 100. Metric rating, buy. Hood. Robinhood Markets Incorporated Financial Services Sector. Capital Markets. Robinhood Markets, NASDAQ. Hood. launched a $1 billion closed-end fund IPO offering retail investors access to pre-IPO companies including SpaceX, Databricks, and Stripe. The fund already owns stakes in AI-driven smart ring maker Aura Health and UK fintech Revolut, with 40 million shares expected to be sold at between $25 and $35 each. Trading is expected to begin February 26th, with the IPO expected to raise as much as $2 billion. Investors can request shares starting February 17th. Here are the key growth metrics for Hood. Sales growth trailing 12 months, 51.7%. EPS growth next 5 years, 20.2%. Target price upside, 65.4%. Drawdown from 52-week high, minus 49.6%. 200-day smooth moving average position, minus 27.3%. Overall score, 74.0 out of 100. Metric rating buy. Article recommendation, buy. To summarize Hood, article recommendation is buy. Growth stock score is 74.0 out of 100. Metric rating, buy. IoT. Samsara Incorporated Technology Sector. Software, infrastructure. Samsara Incorporated, NASDAQ, IoT, continues to grow rapidly as the pioneer of the connected operations cloud, providing a platform that allows businesses with large physical footprints to track and analyze assets in real time using plug-and-play IoT sensors and AI-powered cameras. Samsara's AI video safety segment, which monitors distracted or drowsy drivers, is expanding rapidly and materially reducing insurance costs for clients, generating high net retention and recurring revenue growth. Unlike traditional GPS providers, Samsara operates as pure software-as-a-service company, serving as the centralized brain for businesses in the physical economy, with its land and expand strategy encouraging adoption across trucks, warehouses, equipment, and workers. Regulatory mandates for digital logging and safety tracking further create near-term, forced demand for Samsara's platform, but risks include economic sensitivity, downturns in physical industries, high valuation, and competition from legacy providers like Verizon Connect and emerging startups. Here are the key growth metrics for IoT. Sales growth trailing 12 months, 29%. EPS growth next 5 years, 41.8%. Target price upside, 65.9%. Drawdown from 52-week high, minus 46.2%. 200-day smooth moving average position, minus 26.7%. Overall score, 75.5 out of 100. Metric rating buy. Article recommendation, buy. To summarize IoT, article recommendation is buy. Growth stock score is 75.5 out of 100. Metric rating, buy. NVIDIA Corporation Technology Sector. Semiconductors. NVIDIA Incorporated, NASDAQ, NVDA, has come under increased scrutiny following CEO Jensen Huang's absence from AI Summit and appearance at late-night engineer gathering in California, raising questions about strategic priorities amid intensifying competition over next-generation memory. The chipmaker's lack of participation in India's AI Impact Summit and California engineer gathering raises questions about leadership succession planning and strategic priorities. Analysts have raised concerns about NVIDIA's ability to maintain leadership in AI and AI-driven computing as competition intensifies. Investors may view NVIDIA as a high-risk, high-reward speculative play with limited near-term catalysts. Here are the key growth metrics for NVIDIA. Sales growth trailing 12 months, 65.2%. EPS growth next 5 years, 50.4%. Target price upside, 33.2%. Drawdown from 52-week high, minus 7.8%. 200-day smooth moving average position, 12.2% above. Overall score, 90.0 out of 100. Metric rating buy. Article recommendation, buy. To summarize NVIDIA, article recommendation is buy. Growth stock score is 90.0 out of 100. Metric rating, buy. RBLX, Roblox Corporation, Communication Services Sector, Electronic Gaming and Multimedia. Roblox Corporation, NASDAQ, RBLX, remains a compelling long-term opportunity in gaming and metaverse gaming as user engagement and retention metrics remain robust and monetization accelerates across its immersive platform. Roblox Corporation continues to grow its user base and monetize its platform, though it remains loss-making and trades at a valuation discount to its long-run earnings potential. Despite operating at a loss, operating leverage is expected to improve as monetization gains accelerate across the platform, positioning the stock for substantial upside over the next 3 to 5 years. Despite macroeconomic headwinds, regulatory uncertainty, and competition risks, the company appears undervalued relative to revenue growth and margin expansion. Here are the key growth metrics for RBLX. Sales growth trailing 12 months, 35.8%. EPS growth next 5 years, 26.7%. Target price upside, 59.1%. Drawdown from 52-week high, minus 54.8%. 200-day smooth moving average position, minus 33.9%. Overall score, 72.5 out of 100. Metric rating, buy. Article recommendation, buy. To summarize RBLX, article recommendation is buy. Growth stock score is 72.5 out of 100. Metric rating, buy. RDT, Reddit Incorporated Communication Services Sector. Internet content and information. Reddit, NASDAQ, Reddit. Receive a large number of comments from small business owners about businesses that quietly make money through simple, repetitive operations that are not trendy apps or viral startups. Businesses like slushy machines, ice-making machines, and dry cleaning operations show steady demand and straightforward operations. Reddit users shared real-world examples of what they called boring businesses quietly printing cash because demand is steady and operations are straightforward. The comments show that small businesses with low-risk, low-cost operations that operate in a similar way to traditional tech startups are more likely to succeed. Here are the key growth metrics for RDT. Sales growth trailing 12 months, 69.4%. EPS growth next 5 years, 44%. Target price upside, 59.8%. Drawdown from 52-week high, minus 47.1%. 200-day smooth moving average position, minus 20.7%. Overall score, 83.0 out of 100. Metric rating, buy. Article recommendation, buy. To summarize RDT, article recommendation is buy. Growth stock score is 83.0 out of 100. Metric rating, buy. SEZL, Sezzle Incorporated Financial Services Sector. Credit Services. Sezzle Incorporated, NASDAQ, SEZL, reports Q4 earnings Wednesday after market close, with analysts expecting revenue growth of 28.7% year-over-year, down slightly from the 101% increase in the same quarter last year. Sezzle beat revenue expectations last quarter with $116.8 million in revenue, up 67% year-over-year, driven by strong demand for its cloud-based pay-to-pay platform. Analysts have generally reconfirmed estimates, indicating confidence in the company's performance heading into earnings. Sezzle has a strong track record of beating analyst expectations, and analysts expect the company to maintain momentum heading into Q4. Here are the key growth metrics for SEZL. Sales growth trailing 12 months, 88.7%. EPS growth next 5 years, 44.2%. Target price upside, 47.9%. Drawdown from 52-week high, minus 66.5%. 200-day smooth moving average position, minus 32.2%. Overall score, 82.0 out of 100. Metric rating, buy. Article recommendation, buy. To summarize SEZL, article recommendation is buy. Growth stock score is 82.0 out of 100. Metric rating, buy. Snowflake Incorporated Technology Sector. Software, application. Snowflake Incorporated, NYSE, Snow, delivered strong Q3 results with revenue up nearly 29% year-over-year and product revenue up 29%, exceeding expectations, with product revenue growing at the same pace to $1.16 billion and exceeding expectations. Operating margins expanded meaningfully, with non-GAAP operating margin expanding more than 450 basis points to 10.8% and free cash flow margin approaching double digits, reflecting improved cost discipline across sales, R&D, and G&A despite ongoing investments in growth. Cortex AI reached a $100 million revenue run rate a quarter ahead of plan, and AI influenced roughly half of all bookings during the quarter, with Snowflake Intelligence emerging as the fastest adopted product in company history, broadening data access across enterprises and driving deeper platform engagement. Remaining performance obligations rose 38% to $7.88 billion, signaling strong multi-year demand visibility, while net revenue retention remained healthy 125%, underscoring durable customer expansion even as customer expansion moderated modestly. Here are the key growth metrics for Snow. Sales growth trailing 12 months, 28.5%. EPS growth next 5 years, 39.1%. Target price upside, 60.4%. Drawdown from 52-week high, minus 39.7%. 200-day smooth moving average position, minus 22.5%. Overall score, 72.5 out of 100. Metric rating, buy. Article recommendation, buy. To summarize Snow, article recommendation is buy. Growth stock score is 72.5 out of 100. Metric rating, buy. That wraps up today's 10 buy-rated stocks on BuyTheDip.news. Like and subscribe for daily signals. Nothing here is financial advice. See you next time.